Okay, so we're here in Scottsdale, Arizona, live at the Alternative Asset Summit. We'll be talking about our deal flow today, but providing accredited investors and non-accredited investors performance out in the market. So, wide breadth of diversification capabilities here today. At the Alternative Asset Summit, just quick little house cleaning. What have we been doing this week? Yesterday, we attended the Arizona Real Estate Investors Association. They're actually right here next to us at the booth here. That's Mike Delpreet. So had a tremendous amount of interest for people wanting a passive rate of return out in the market. In the Arizona market. Now, with our new opportunities we have with our partners, Jason and Todd, those are in single family residence, second lien positioning at 65% loan to value or less with the new debt, providing us the availability to feel comfortable in our return on investment. And those opportunities are currently coming in the Arizona, Florida, Texas, the Carolinas, and Nevada, and we'll be raising $50 million for those positions, providing our availability to pay you off if a non-performance takes place. So we end up repossessing the home, actually foreclosing, paying off the first, flipping the property for additional return. There's 35% equity in those. For us to deem acceptable as a return on investment. So not only providing you a double-digit yield out in the market, but also, for us, additional return if that home goes non-performing. So I'm sitting here behind the booth here today at the Alt Summit. I got our partners here today. Jason, appreciate having you on the channel today. Let's kind of talk about some deal flow that we have and how where there may be an opportunity for individuals.
All righty, sounds good. I'll go through the. I think we've got four that are ready to go on the board right now. So I figured let's go through those real quick, and we've got a bunch of them, but these are the ones that are furthest along in the pipeline. The first one is it's close to you. I don't know how far away this is from you, but it's in Chandler. This property is, let me go through the notes here. We just got the reinstatement letter. He owes 50, what does he owe here? 56,000. He's got a first mortgage of 892 remaining balance at 2.7%. He's behind, let me see here. Yeah, 56,000. Let me give you a really accurate number. We've got the reinstate.
Jason, are you going to show your screen?
Oh, sorry. Yep, let me do that.
I've got it wide open for you to go ahead and share it.
Sorry about that. Okay, so you can see this house was built in 2020, so it's pretty much it's 5 years old. You can see the Zestimate there is 1.865 million. It is a gorgeous house. We've got pictures of this property. Like I said, the first mortgage is 892. That's the balance at 2.7%. So obviously this person wants to keep this first mortgage in good standing. This guy is actually asking for more money so that he can do some other things. But you can see right there, he'll end up being in this thing for less than 900,000, so about a 50% loan to value, with a second of anywhere from 65 to, depending on how much we end up giving him, upwards of 100. So the loan to value is still tremendous. I'll let you figure out payments if you want to do that. But this one is very typical of the type of deals that we are getting on a daily basis. We probably get 3 to 4 of these kind of deals every single day.
So that's a
That's
$66,000 position that we're originating, you know, a, a monthly payment distribution for a 3-year term is $660 a month, where you become the bank and take that second, hypothecated or either in the fund, both areas of opportunity. $66,000 acquisition and $660 a month here in the Arizona market for a 3-year term. We could do a 1-year term for a little bit less. Will yield you still a double digit monthly distribution, but both areas of discussion and immediately potentially available. This Arizona market's green lit for us to go ahead and take place, I think, early next week. So we're making it happen.
Excellent. All right. Let's see here. The next three, I think, are in Texas. So let me hear. Here's the property. Let me go through the notes here. The Zestimate on this is 356. Um, they owe 100 and what do they owe? 130,000 is what they owe on the first. They are looking for 40,000 to bring this current, 30,000 to bring it current. The note would be 40,000 to bring it current. They've got, I believe the auction is coming up on this one. So this one is going to be time sensitive, but I believe the auction is November 5th on this property. Yeah, so total loan would be roughly 170 on a $356,000 valuation. Again, another 50% loan to value situation on a really nice house.
And I mean, at a low, acquisition, that's a $40,000 acquisition, or really collateralized lending opportunity. Lucky 333 a month for 1 year. Pick up the threes and we'll start cash flowing in 30 days. Time is of the essence for that 40,000, pretty low balance. Definitely a quality home there in the Arlington area.
And all the ones we're discussing today, they've got the time is of the essence because either the auctions are scheduled or something is pushing us to get these done. So these will all need to close this month, just in terms of a timeline. Let me see here. Let's go to another one here. This one's in Dallas. All righty, another brickstone home. You can see, let me see here. In this situation, the valuation on this one is $360,000. The notes here, this guy was a school teacher. He lost his job, transferred school districts. Now both he and his wife are working again. They've got a good income. Again, the balance on the loan on the first is $146,000. They have a brand new roof on this property, but there is a little bit of water damage. So on this property, we're going to lend more in order to get the repairs done, so that if in any situation, if they can't make the payments, the goal is to just help move them along so that the house is in a retail condition so it can be sold without having to foreclose. That's kind of the benefit of doing it this way, where we don't get stuck in a 9-month long foreclosure situation. So in this case, we are in the middle. We're getting ready to do a 4-point inspection on the property, get bids for the repairs on this property. We'll end up lending about 40,000 in this situation. So his balance will be roughly it'll be less than 190 on a $360,000 property. So you're talking about about a 55% loan to value in this situation on a house in a great neighborhood.
I mean, to find positions, at this low loan to value, we do an open-ended line, prime, private home equity line of credit. Why do we do an open-ended? Well, it's strictly asset-based, and within the guidelines of the law, you can not have to have the borrower qualify their ability to repay. So literally, this is strictly asset based on a second lien position. 40,000, we had two of those. We just had two $40,000 positions, and they're both paying 333 a month for a 1 year term. This is it. People, I don't think people are understanding online. This is literally a live marketplace going on right now. So, take your notes and down on what properties you like, because our objective is to take down every one of these. We're starting a $50 million position for notes just like this. So Jason, how many deals are you guys kind of getting a month right now?
I would say we get about 2 to 3 a day. Now, again, we're marketing in different states because we're doing the marketing to buy, fix, and flip, obviously. And right now that's about 7 states that we're marketing in. So just from the note side of it, I'd say it's about two to three a day that we're getting. Some of those don't work out because of, maybe inspection didn't go very well and the house needs more work than we're comfortable, lending on. But I would say easily we get 2 to 3, quality leads a day in multiple states. And right now we're focusing on just Arizona and Texas, but we also get Georgia, Florida, North Carolina, um, and other states as well. But those are our main states at the moment.
Yeah, and those states, why are we in those states? Really, because they're investor friendly. And what does that mean? That means that there's relative ease of foreclosure. We deem it acceptable as a risk mitigated factor to deploy into those markets. So all great points. What else you got?
Let's see here. What's this one here? Yeah, this is another one in Texas. You can see, let me go through the notes here. His estimate's 347 on this one. The first mortgage is the balance is 135,000 with a 3% mortgage. The monthly payment on that is 1,700, and that includes insurance and taxes. This is another one that is going to auction on the 5th of November. So time is of the essence again on this property. The balance, let me see here. What is the balance on this one? I
I'm
think
going
the
to
balance on
interrupt you
this.
for just I'm going to interrupt you for just 1 second, Jason. I want to respond to Yvonne, and I'm not able to do so in the chat. Yvonne, I'll call you as soon as this is over. Sorry, go ahead.
That's all right. On this one, he is $30,000 behind. This is another similar health issue that now they're back on track working. They've got the income again. For the most part, the majority of these, well, on this one, it's going to be about a $40,000 note. So you're at about a total of 50% loan to value. You'll be in all in at about 175, and the property's worth 347. So roughly another 50% loan to value. But the story for most of these situations is these folks have owned these houses for a long time. They've got equity in them. They've got really good first mortgage interest rates. It's been kind of their forever home, so to speak. And their goal is they do not want to lose this. They absolutely want to keep this as their family home, and they're willing to do whatever they have to, to make it work. So the ultimate goal for these folks is to, we give them a bridge loan, to give them a shot to get the situation fixed. Their goal is to, get into credit repair, try and fix their credit, refinance that debt into some cheaper debt, and keep that house. But we are structuring these deals in a way where they understand, listen, the only way you're going to lose all your equity is if you go to foreclosure. So if you can't make your payment, you got to call us and tell us and let us help you get this thing sold so we don't have to go through the foreclosure, and they get to keep some of their equity. But you can see based on, everything we're showing you today, and these are real deals ready to be funded here in the next week or so. um, we're at 50% loan to value on average. We're talking about 65% is the high, but on average, we're at about 50%. So, well, we love the fact that we're able to help these folks, one last shot to try and keep the house, do whatever they can. A lot of these folks are saying, listen, if I have to, I'll get a second job. I just need the chance. So not only, are we offering great loan to value and great, a great return to our funding folks, but we're giving these homeowners an option that they just can't get in the open market right now.
It's important to discuss, how are we even getting these deals at the end of the day? And we hit lists available of people going behind on their payments, and 9 out of 10 people are trying to just buy their house, which we were trying to buy their house. So we've found that a higher success rate of, hey, we know you're going behind on your payments. Why don't we originate a private home equity line of credit for you at these benchmarks, and we'll keep you out of the foreclosure? So the objective to understand in that conversation is, in case of non-performance, we were trying to buy the house anyway. In other words, we're not just a lender. We came from trying to fix and flip the property. And that's why we feel comfortable if non-performance were to occur. And what would we do in that situation? Throw our hands up? No. We would actually pay off the first and fix and flip the property and pick up another 35% equity as an additional return on investment. And we'll probably just pay off at that point. Offer you another passive rate of return secured by collateral and keep it pushing. So just wanted to talk about that.
Absolutely. I've got one. We literally just signed the contract about 15 minutes ago, and it's a little bit different than what we're talking about. But this is a person that did not, they just want out. They've already moved. They're in the army. They've been transferred. They don't want the responsibility of owning the house, or they don't want to have the payment anymore. So there are other opportunities from the marketing that we do for folks that want to do more than just the note side of it. This property is you can see right here the assessment on this is less than 200. We actually think it's closer to 213. But listen to this. The homeowner he's like, just take it over, get me out. We are assuming what is that, just about $170,000 note at 2.25%. So there's not a ton of equity in the situation, but where can you borrow money at 2.25%? So from an asset-based situation where you're either, somebody that wants to control rental property, or you want to turn around and own the note, resell this property, create a new note, which is great for this group. You're arbitraging a 2.25% loan that I just don't think we're ever going to see those low rates again in my lifetime. I'm not sure we'll ever see in the fours again, maybe, but the 2.25%, I just don't see it. But this is a scenario where you can not only own the note, but you could own the real estate, create a new note, sell it, hold that note, for the new buyer. And, obviously there's some equity in there, but you're creating a long-term income stream off of a 2.25% loan that you're taking over. And we get these, we get multiple of these every month as well in those 5 or 6 states.
What was the unpaid balance?
The unpaid balance is there's a 123 first mortgage, and then there's a solar panel loan of 45,000. So the total is about 170 owed on this house that's worth around 200 to 213. So there's a little bit of equity going into it, but mainly the cash flow, because the payment, let me see here, the payment on this thing is like $850, and the estimated rent is around 13 to 1400. So
So on 170 at 2.5%, 30-year mortgage at 2.5% is like 680 a month.
plus insurance and taxes.
Right.
Yeah.
What's the average rent over there?
Anywhere from about 1300 on average.
Okay, you just said that. Sorry.
Yeah. 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 So you're looking at you're stepping into an immediate cash flow scenario, with the 2.25% loan, for the next 30 years. So it's a way, a lot of folks don't understand how to create wealth. You don't have to do it via equity. You can also arbitrage the interest rate. And this is something we do a lot in many states right now because of the cycle we're in.
So massive deal flow, lots of opportunity we have. I think you're forced to pivot at any given time, and it's tough to do, but really that's just a lack of education. And once you get your education, you get your due diligence check boxes, and there comes your comfortability. It comes from checking off boxes within your risk mitigating factors and really taking that leap forward. At the end of the day, I think a lot of people get the analysis paralysis for their want for return on investment. And it's important to be upfront and honest with your your timeline of where you've been, how many education classes have you taken, do you have the proper due diligence check boxes, and just take a shot at something maybe a little bit lower as your acquisition cost, so your upfront cost of what you acquire, and take a leap of faith. These are $30,000 to $40,000 positions. You're with a qualified operator today. Jason, how many deals has your group done?
Well, just fix and flips. I know we've done over 1,200 in my lifetime, but that doesn't include wholesale deals or rental properties. We are probably over 2,000 nationally in 25 years.
So, I'm 8 years in. I've done 300 doors. My father's 10, 15 years in. How many doors have you done? He's done 1,200 doors. So you got thousands of doors and literal seasoned expertise here in the room. Hard to find, especially with the deal flow that we have, highly unique. So I encourage you, we're probably going to keep it a little short today because we're here at the Alt Summit. We've had, I think, multiple people actually walk up and grab a couple brochures while we're sitting here. I got the TV up. You guys are actually being viewed by everyone walking by. So, live deal flow, a lot of got the W's in the sky there. If you don't see something that you like on our website, you can call us direct at 602-888-2274. We have people immediately, waiting to field your call. Sonny and Sean are happy to assist, on our website at mobilemailboxmoney.com. We have a chat box. You can even ask questions to, I think, Sonny that's monitoring that all the time. From all the above, we actually have PayPal set up on our account. You could literally buy a note today at mobilemailboxmoney.com. Today's brought to you by Silvercrest Opportunity Fund. That's our 506C Reg D official SEC offered program for directed IRAs, personal investments, solo 401ks at a 1-year term, 10% paid monthly, 3-year term at 12% paid quarterly, or a 5-year term at 14% paid monthly. Appreciate you guys all being here today. It's every Thursday at 12 o'clock Arizona time. So whether we're in a conference, we're out in the UAE sometime next year, or maybe on the beach somewhere enjoying our passive rates of return, we'll always be going live on Thursdays. So appreciate you guys being here today. Don't hesitate to reach out, buy a note today at mobilemailboxmoney.com. Hey.
All righty.